Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to have a quick chat about the latest developments in the crude oil market, plus how the countdown for the all-important FOMC meeting next week has begun. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, indeed, the crude oil. Oh, hi. Hello there. Hi, John. How are you? Hope you're well. Hello. Hi, everyone. Hi, John. How you doing? And yeah, hello there, Latif. Good to see you. Hope you're well, sir. Hope you're having a good day. Okay, so yes, the crude market or crude oil market is indeed on the move. And there's several reasons for this. It's currently trading around about $81.33. And we'll have a look at it, obviously, in a minute. But there's several reasons why oil's in the headlines again today and why it's on the move. Let's start off, first of all, of course, with supply issues. Now, OPEC Plus met yesterday and they agreed to keep to their October plan, and that was to cut output by 2 million barrels per day. Technically though it's 2 million barrels a day, realistically that's 900,000 barrels a day to the market, because already a number of countries in OPEC Plus is already not hitting their quota anyway. So it's actually 900,000 barrels, but still that's a cut in production. Plus, to add to all this, the G7 nations and Australia have started to impose a $60 a barrel price cap on Russian seaborne Russian oil. In a joint statement, this is what they had to say. This is to prevent Russia from profiting from its war of aggression against Ukraine. On the knock-on cap, this basically, what this means or how they're going to put this into place is basically any Russian oil bought for $60 or less will be allowed to be shipped using G7 and EU tankers, insurance companies, and credit institutions. Any oil paid for above that price will not be allowed to be distributed by those means. Okay, so this is what they're going to try to do. The overall implication on the market is uncertain at the moment, but this is clearly another obstacle which could indeed affect supply. Russia has come back, of course, and they've threatened to cut supply to any country who adheres to price cap. So here we go. We have supply issues. OPEC Plus keeping their production cuts in place, and of course now this new price cap restriction, and obviously Russia now threatening to cut supply. Demand then, let's have a look at demand. Demand is indeed potentially on the rise. Reason for that is China. Because a number of Chinese cities have started to ease COVID-19 restrictions over the weekend. Don't forget, China's been locked down for the majority of this year, which has affected their economy drastically because they have a zero tolerance to COVID-19. However, there is signs now that they're beginning to pivot on these restrictions. And don't forget, China is the world's second largest economy and the top crude oil importer. So if they come back into action, then indeed demand for oil will greatly go up. But let's have a quick look at the oil market, how it stands at the moment. Like I said, it's trading around 81. Hang on, there we go. Try it again. Got it working this time. Trading around $81 a barrel and 38 cents. Now, that's a very good question, John. That's a very good question. Do you trade CAD when there's a move in the price of oil? The Canadian dollar, the loonie, is a commodity-based currency, okay, along with the Norwegian krone or the NOK as well. So both those currencies potentially can actually benefit from higher oil prices. But yes, you do look at the dollar CAD or the CAD pairs and the NOK pairs when there is developments in oil. So that is definitely something you can look at. So that's a very good point. And we'll have a quick look at the dollar CAD actually while we're at it as well, John. It's a good question. Great question, in fact. Okay, like I say, so we have got oil currently trading at $81.33. This is on a daily chart. Now, like I say, we had seen the move over the weekend because of obviously what OPEC has said yesterday and the threats obviously from Russia and the chances of demand. However, at the moment, it is still below the 50 and the 200-day moving average on a daily. So realistically, a key area for me would be around about here, around about $84.30, which is the 50-day moving average. That's the area I'm keeping a close eye on at the moment. Brent has also benefited, obviously, from it as well. Not so drastically, currently trading at $87.07. This again is on a daily. Key area for me is around about that Fibonacci retracement area, 160 ratio 161.8, which is around about $80.34. So that is something to keep a development on. But this is why oil is back in the market again. Following on John's question, actually, let's have a quick look at the dollar CAD and see how that is benefiting, if at all, moving on the back of this. Here he goes, the loonie. Okie doke. So as you can see, all right, there's a little bit dollar weakness against the CAD. Nothing dramatic. Trading above the 200, but trading just above, just below the 50. Currently trading 134.18. So that's a good, great question, John. Great question. Other news. Of course, on the back of the NFP on Friday, we now have the countdown to obviously the next FOMC meeting. Okay, so this meeting is going to be on the 13th and 14th of December. So next week. So there's much anticipation on this, of course, because we've got signs of cooling inflation. Don't forget the headline rate 2 weeks ago was reported at 7.7%. Core was 6.3%. But as well as that, we had still a very impressive job number on Friday. Don't forget the NFP came in at 263 versus 200,000 expected. So, but despite that, and earnings was also a lot higher as well. But despite that, there is still expectation for next week, the FOMC will only do 50 basis points. Now, the other thing which is going to be interesting, because this is the period of time now that basically the Fed goes into hiding. What do I mean by that? Basically, it's the blackout period where there's going to be no more speeches, no more discussions or statements made by the Fed until the meeting next week. So we're going to have the complete blackout. So they don't do any public engagements, any statements at all in relation to the economy or what they may do with monetary policy until they do the interest rate decision next week, followed by the press conference. So we have a total blackout period. But anyway, the countdown's going to begin. We've got some key US data coming this week, which I'll discuss about in a minute, which can also affect it, obviously. But for now, we've got to wait till next week. On that note, something else I want to talk about, which is just as exciting, I want to share with you. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway.
Join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
And there we go. Yes, indeed. This Wednesday is the next episode of the Tixee Live Presents Trading School. We've done 6 episodes so far. So don't forget, this is on Wednesday at 6 p.m. UTC. The subject me and my colleague Stefanos are going to discuss and go through, which is something which I think is key, and I talk a lot about on this program, is market sentiment. And we will also be discussing the Commitment of Traders report, which is a key bit of information, which is free out there for you to read to give you the indication of what the market sentiment is. So please come and join us for that. Don't forget, these are live because Tixee Live does mean live. However, they're not released on YouTube till a couple of weeks later. To come and watch it live with me and Stefanos on Wednesday and ask questions and engage with us, there's a link in the description below. So please click on that link and join us next week. Right, other information, other exciting things to come or happening today, actually at the moment it's happening, is that EU retail sales, which is due right now, which we'll have a quick look to see what it was. Expectation was negative 2.6%. Let's see if we can find out what it was, because it's about to come out now, so I can really watch along, but not quite. And we'll have a quick look at the euro as well. But anyway, as I wait for that information, something else coming out today, which is also really key, And that, of course, is US ISM Services PMI. Don't forget the manufacturing PMI last week greatly disappointed the market because it did show signs that it was beginning to falter. Expectation for this, though, is still for it to be above 50. Don't forget, anything above 50 is a good sign. So expectation is to come in at 53.1. So we need to keep a close eye on that. Hey to you too. I hope you're well, and I hope you're having a good day. Good to see you. Good to see you. Okay, actually, right, retail sales. Okay, we have a quick look at the market in the moment. Yeah, like I said, just come out negative, worse than expected. Actually, it was negative 1.8%. Like I say, you expected to come in. No, actually slightly better though, isn't it then, in that case? Hang on, let's have a look. 2.6, they said, but it's actually negative 1.8. So still in the negative. So still not great news, but not, no, tell her right, that's month on month. Sorry, year on year was negative 2.7%. So worse than expected. Negative 2.6 was expectation. Year on year was negative 2.7. Month on month came in negative 1.8. Expectation was negative 1.7. So let's have a quick look at the market, actually, while we're talking about this now. Let's have a quick look, see how it's favoring. Because don't forget, we have still had a fair bit of dollar weakness on the back of the optimism that a Fed pivot is incoming. This is the euro at the moment. Like I say, finding support around that 200-day moving average of 1.0388. Key area for me, though, remains at 1.06017. Really not paying much attention to that retail sales data by the looks of things at the moment. Currently trading at 1.05583. So yeah, still got slight dollar weakness across the board. Let's look at the sterling, obviously, the cable. Again, dollar weakness under the 123, though, which it flirted with a little bit. So key area for me for the year, sterling, potential resistance, potentially, is 123.43. Support for me, those at 200-day moving average, again, 1.21092. Dollar yen. Let's have a look at that. Again, we've had a bit of a bounce back. Still flirting around that 200-day moving average, though. Currently trading at 135.27. One other thing we're going to look at. Have a guess, everybody, what I'm going to bring up next. Any ideas? Any ideas? Oh, of course, you know it's going to be gold. Obviously, I'm a gold bug. Currently trading $1,796. Really, really fighting with that key area I've been watching for a long period of time now, $1,803.50, which is a key potential resistance. And as you can see, it's been holding for quite a while. Gold, yes, of course I was going to talk at gold. Of course I was. Of course I was. It's always going to be gold. So yes, that's still really trying to break that level, but it's flirting around it, but just can't seem to break it at the moment. S&P 500, again, above the 200-day moving average. Can I extend my screen? What can you only see? What bits can you see? Can you see, hang on, if I do it this way, is that better? Can you see it a bit better then? Is that better? Can you see it? Never mind, all good. All right, okay, you can see. Okay, all right, no problem. Okay, cool. Like I say, so, yeah, so again, you know, it's like I say, on the day, we've had closed in a negative on Friday on the back. You had the thumbnail. What, my thumbnail for the thingy? Can you see my chart? Okay, everybody see my chart? Okay, though. Can everybody see my chart? Can you see it? Everybody see the chart? Okay. Or we got a technical issue? No. I don't know if you can see my chart anyway. But like I say, anyway, still trading about that 200-day moving average. So, yeah, big events for this week. What we've got coming up. Like I say, we've got EU retail sales, which we just had. ISM Services PMI today, which is key. RBA interest rate decision, the Reserve Bank of Australia. Australian GDP, EU GDP. Canada interest rate decision, and the Michelin consumer sentiment. And like I say, the countdown to the Fed next week. Into a chart now, the thumbnail. Okay, but you can see, okay, you can see the chart now. Everybody can see the chart, yeah? But anyway, these are the big events we got coming up this week. And like I said, it's really going to be the build up for the FOMC next week. European equities, as they currently stand, firstly, currently in the green, 0.24%. DAX currently trading slightly negative, 0.39%. Euro Stock 50 currently trading also in the red, negative 0.25%. Don't forget, you can ask me questions anytime you talk, or just say hello, or let me know if you can't see my charts. All right, if there's a technical issue. Okay, well, I'm going to see you saw my charts anyway. Don't forget, if you think of a question later, you can put it on in the comment section of Facebook or YouTube. I will see them and I will reply to them next time I go live on air, which of course will be later this afternoon around 3 p.m. UTC to discuss the US session and to sort of maybe discuss any more further developments in the oil market. So don't forget that as well. Okay, if there is no more questions, not a problem. Not a problem. Don't forget, if you think of a question later, put it in the comment section. But okay, anyway, like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoy this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, find it interesting and useful, and you put up with me, my over-the-top enthusiasm for the markets, I simply just cannot help. Then give me one of these. It's nice to know that you like what I do. I see I've got a couple of likes already, which I really appreciate it. I really, really do. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.